Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look at the gold market. I'm really glad that you're watching this video today because we will explain a very important thing. Yesterday we actually have created a great plan. It was really perfect and even starts working, but just within one session we've got lots of new information that, well, it's not actually easy to find in media, so especially to combine it together. First of all, in the United States, in last session, the interbank interest rate, overnight interest rate, calls as a SOFR, previously was a LIBOR rate, has jumped above the reverse repo rate. It means that for investors right now, it's more profitable to use cash on the interbank market rather than to put it with the Fed. And usually this happens when there's some issues with the short-term liquidity appears. Second moment that I would like to show, if you take a look at the 10-year bonds, you will see the market totally ignores the 50% rate cut. It's returning back to the 3.8 areas. So here was some demand on the Middle East conflict, but now you could see what is happening. On the dollar index, you could see very significant rally. This is weekly chart. I already talked about this in today's Euro video, that in fact we have double ripple look-alike pattern here. Suggest further dollar appreciation in the short term. And as you understand, this is not good news for the gold market, at least in the short term. Because when it's a liquidity shortfall, you are not care what's going on around. You just need money to plug some holes and pay out the debt and call the margin. So and close the margin calls. And from that standpoint, whatever you have on the Middle East or somewhere else, or no matter what's going on, you do not care because you do not make the bet on some events. You just need money to pay out your obligations. And from that standpoint of view, gold market, together with the most risky assets, becoming the first victim of such sell-offs. The strike also that stands in seaports in the United States bring more fire to this fuel. So it means that despite how perfect setup that we have discussed yesterday looks like, currently it shows the signs of the failure. It hasn't failed yet. Maybe it will work because grabbers still exist, but in the current circumstances, what I do on the 4-time frame chart, you could see an unnatural price performance. So grabbers have been formed. Now it's at the edge of the possible failure as well. Release total erasing of this. And on the hourly chart, you see unnatural performance of the market when it's forming hand and shoulders. Our prediction starts just perfect from the points that we have specified. But take a look what has happened after that. Market collapsed and returned back to the support area. Yes, this support is not broken yet, but this is unnatural performance for the bull market, not typical. This trade that we have started yesterday now stands at the break-even, mostly has closed at the break-even. But in the current circumstances, personally, I do not want to consider taking new long positions right now. I prefer to see how this story will over, because when the market behaves in this way, it's really big chance that we will get deeper retracement. And the failure of the hand shoulders suggests drop below the lows of the head, 26.24, and potentially here you could see might be some butterfly to be formed where we could see a 26 area. Price might be dropped to the 26 area. So by looking on this overall performance, currently I would consider taking new long position in the current circumstances. As for experiment, if you would like to, theoretically you could try to make the bet on this situation, or if you take in position initially, you could just hold it, but taking in consideration all the stuff that I said. Formally, we do not have yet the failure of the grabber. Whether is this chances that it will work? Sure, it could happen. But since our trade has been started right there and now it is closed at the break-even, so in fact we have no position right now, taking in consideration all the stuff with this liquidity and other moments, in the current current situation, I prefer to wait and do not take any new longs by far, because I do not like the performance that I see on the gold market. And the indirect confirmation of this is a collapse on the Bitcoin. Bitcoin, because it is most risky and volatile asset, and when some real problems exist, gold, Bitcoin are becoming the first victim. So market tries to hold more reliable and blue chips, let's call it in this way, blue chips assets, while selling less reliable and some kind of some that are risky or less profitable assets. So this is what we have currently. That's just a few points on the current situation. But as I said, it's just my opinion. I don't pretend that it will be the truth in the last resort. So if you would like to hold this position and make a bet on the grabber that we have on the daily chart, it's possible to do, because formally nothing awful has happened yet. We just have get the closing of our trade. But the signs that I see here seems a bit worrying.